Ladies and gentlemen, welcome to the Big Tech Frenzy. Guys, we actually have some very exciting SoFi news. Not only that, is SoFi as a company putting out very exciting news that gets me excited to talk about them and everything like this, but the community is also going to have some pretty exciting news. Ladies and gentlemen, I just scheduled a video. If anyone's on the Discord, you probably have already seen it, but we are doing a great debate around SoFi. Is SoFi a tech stock? Yes or no? Does it deserve a tech multiple behind it? Yes or no? Clearly, I'm on the yes category. I'm going to do my best to play the side of a bull, but also moderating the debate to some degree as well. But Amit Kukreja and Stephen Fiorillo will also be joining more on the bearish side. The people who are saying, yes, you know what, we're potentially bullish on the company, but it does not deserve this type of multiple. They're not doing anything extraordinary. They're not challenging the status quo at all. Okay. On the other hand, we're going to have data-driven investing. And so Chris Hager, data-driven investing, will be coming in as the bull of SoFi. I'm also going to be joining him in case Stephen Fiorillo pipes up a little bit, that I'm going to have to come in. But overall, it's going to be a lot of fun, and I can't wait. So that's tonight at 10 o'clock. So the FinTech Friday, which got pushed to FinTech Saturday, once again got pushed to FinTech Sunday. Don't hate, but I'm excited for the great debate. Should be a lot of fun. If you guys are on X, you can see Amit going or posting a lot about the different tech things that SoFi is or isn't doing. Now, we're going to be talking about something that I actually think is very innovative from SoFi. Brand new product leaks. Not that it's a full leak per se. It's not that, but I'll explain it, okay? This is very, very cool. Timothy Pryor on X posted a survey that he got access to because he's a customer of SoFi's, right? And he posted this. We're going to go through this together. Actually, let me open it this way so that I can zoom. Perfect. Awesome. Okay. Reviewing the following credit card offering, how likely are you to apply for this card? Okay, so they're exploring new credit card options. The SoFi Independence Card gives cash back that is automatically deposited into a SoFi Invest account. It turns your spending into stocks, ETFs, money market funds, or crypto ownership. You get the choice of where that reward grows within three options: an S&P 500 index, a money market fund, or a curated crypto portfolio. You also get access to the SoFi Investors Club, VIP access to investing strategies and insights into early IPO access, and get in on IPOs before they hit public markets. The Independence Card offers the following reward categories: 5% cash back on dining, including takeout and delivery, 3% on gas and groceries, and drugstores, and 1% back on everything else. This card has no annual fees and no sign-up bonuses. Ladies and gentlemen, we're talking about a potential 5% cashback card, or somewhere between 5 and 3% is where everyone's going to be doing the bulk of their spending on this card. If there's the 1% on everything else. The problem with these types of credit card offerings, I always find, is that the credit card offer, like which is SoFi in this case, thinks that the consumer is going to spread out their purchases across all three categories, when really this card is going to just be mainly used for takeout, for dining purposes, including takeout and delivery, gaining that 5%. And then not using it for other options. I mean, maybe 3% for gas and groceries. I mean, that's just absolutely perfect. But imagine this, okay? Imagine they are now starting to offer products that only work well whenever you're bundling them with other products. So they're going to lock you in. It doesn't say lock in, but it does say putting you automatically in funds that are in the SoFi Invest category through partnerships with the credit card. Okay? So the spending goes into a SoFi Invest account. So this is now one product that is actually counted as two. One, that increases the overall revenue that they can make from those cards. They increase wallet share. They deepen your relationships. Most credit card users have a SoFi Invest account. Now, a lot of those credit card users are going to have SoFi Invest accounts. Money, credit card, invest. Bang. Okay? 5% cash back, unbeatable. No company is going to even be able to come near that. Okay? And the only reason why they can offer that is because they're also getting you into other SoFi Invest products. Okay? The game is on, ladies and gentlemen. Noto is striking back with a card that literally makes the SoFi Gold card looks subpar. Okay? That's freaking awesome. Now, as a credit card junkie, as someone who has credit card here, none of those are in my wallet, I would not use this card solely. I would use it as 5% and then or maybe 3% for the gas and groceries and stuff. But then I would use, what's it called? The SoFi Gold card for every other purchase. So then my minimum is 3%, but my maximum is 5%. Okay. So I don't know if it'll balance out as well as they think it will. Regardless, awesome card. Great breakthrough. And then we continued to find cool things on the SoFi careers page this week. Okay. So we found 3 job listings. I'm going to bring all 3 of these up for you guys. Let me take a sip of water while this is loading. Okay. By the way, it's episode 374 of the Big Tech Frenzy, formerly the FinTech Frenzy. Let's go to window here. We'll take a little look. Senior Frontier Engineer, credit card, and SoFi Money. This is pretty interesting. It's kind of like the first job offering that we've seen that combines 2 different sectors or 2 different silos together. Okay. If we actually go down and we start reading, we're looking for a senior frontier engineer to join our team and contribute to SoFi's most impactful products. You'll play a pivotal role in evolving our offerings from market-leading robo-advisors and online brokerages within SoFi Invest. You'll be helping the architectural transformation of SoFi's credit card and exciting new frontiers of the crypto team. So although it's labeled as credit card and SoFi Money, essentially what they're saying is, hey, come join our entire product team. You're going to be working across SoFi Invest, credit cards, crypto, money, all of them, okay? Because they want to work together. And SoFi Plus is not just about making individually great products. It's about making an ecosystem of products that work well together, okay? Same thing here. Another one, Frontier Web Engineer, credit cards, and SoFi Money, okay? Once again, very similar things, what they'll be doing, working across the teams, building products that work well on web and mobile, these sort of things. You go even further, staff frontier engineer, so different from the senior frontier and different from the front-end web engineer. 3 different roles, all multi-siloed. This is the first that we've seen it. So credit cards and crypto and credit cards and SoFi Money. No matter which way you word it, the descriptions are all quite the same. You're going to be working across the entire portfolio of SoFi products. Aside from lending, these are all financial services products. Credit cards is still considered a financial services product, even though it has a credit background. If you want to call it that. Didn't mean to mute myself. Okay, let's go ahead and so we took a look at that. I'm curious, as a poll from you guys, as the new people who are coming in maybe didn't see it, SoFi is now polling people or surveying people for a brand new multi-tiered cashback credit card that has up to 5% cashback, and the lower ends are around 3% for the mid-tier categories and then 1% at the bottom. The caveat is that the cashback goes into SoFi Invest, okay? So this is not immediately turned back around into cash. It's turned back around into an investment. Personally, for me, I think that's phenomenal. 5% on everything, I'll sign up. Yeah, no duh. The entire American population would sign up at 5% cash back. You're just saying, hey, you know, that TV is $300. Yeah, I mean, if it's $50, I'm going to buy it. But of course. Um, nice credit card, but it has nothing to do with tech multiple. Not once did I say it did. I'm not stating that. These are two different videos. The great debate and SoFi's new credit card, two separate issues. Freddie, you also got the survey? That's interesting. That's interesting. Yeah, Costco has a 5% back on gas. Yes, because they can offer a membership as well, and that's probably for Costco gas, not just for regular gas. So they're also cross-selling you on their products as well. But yeah, that makes sense. Can SoFi and or Robinhood ever open in Canada? They can. It looks like Robinhood will be first to that venture, but who knows? I bet you it's on both of their minds to some degree, but it's not a big offering, that's for sure. Little Shift 4 news. Yeah, I mean, we can talk Shift 4. Shift 4 is very exciting right now. Jared Isaacman, honestly, he's one of the greatest entrepreneurs of all time. Like, actually, I know he's only done one startup that like potential public investors are aware of, but then you also have like Draken International and stuff like that. But he really is a one of a kind entrepreneur, and so he was as the original nominee for the new NASA chief, and now supposedly the Trump administration says they're going to change that. So he's losing his job, and he's already left Shift 4, so he's a little between jobs right now, but he still has the majority stake in Shift 4. He's the largest shareholder there. His money's tied with that company. I'm sure he's not sitting at home. Someone like that is not sitting at home. So a little bit bullish for Shift 4 to some degree. I wonder if the stock pops on Monday. I work at Costco. It's 4% gas and 3% everywhere else. Yeah, I thought it was 4% as well, but I'm also a Canadian Costco user, so I didn't know if it was different for you guys. But yeah, my assumption was it was 4%. Okay, let's see. Cross-selling to increase the number of products per user is huge. Like, truly, I feel like the vision that has been set out by SoFi is on a month-over-month basis, or even on a weekly basis, is the way that a lot of us look at SoFi, even some of us on a daily basis. It can look like things are potentially moving slow. But the vision that they've laid out across, expanding the amount of members that they want, expanding the product offering, going into SoFi Plus as a way of cross-selling, and now offering products that directly tie to other products. I mean, this is exactly the ecosystem that every last one of us signed up for. That's what we want. Tech multiple, no tech multiple. Like, what customers want, or what investors want from companies, is a company that can improve operating leverage, meaning that every single customer that comes on additionally onto the platform can be a lower cost to serve. Potentially, it can be a lower cost to serve because you're looking at it from a net profit margin. And so each individual person can actually bring operating leverage if you're moving up market, if you are getting customers that bring in more money, right? Cross-selling multiple products is a great way to increase average revenue per user. And the tech platform that SoFi lives on top of means that the more members that come on and the more products that they use does not increase the total cost of that member. Okay, maybe it does from a very, very marginal rate, but not overall, not at all. Like, yeah. So SoFi's overall take rate on the customers that they're bringing in, the products that they're selling, has continued to improve every single time. Um, So when SoFi to 25? Well, I personally think that it won't be very long, honestly. I think that we probably get there in the next few quarters. I know that that seems crazy because we're at like 13, but you see how fast SoFi can get re-rated, right? With a good macro environment, SoFi can go from 7 to 18 like overnight. Like it was like a month, you know? Um, with any sort of rate cut at all this year, along with much faster expected growth from users and hopefully keeping defaults down and cross-selling into new products, that will increase revenue faster than Wall Street's expecting, increase the the margin that they end up seeing. I think that they can get there very quickly. Devin Ryan, the Wall Street analyst for what's the frickin' company? I'm gonna go crazy here. JMP Security, sorry, yeah, Citizens Bank, said that this company at fair value today is probably $25 today. What's your time horizon with SoFi? I don't really. I mean, to some degree I understand your question, but like I'm going to continue to hold this company as long as it continues to do and say what its mission was, right? Even in a very mature time, 10, 15 years from now, if they continue to go and spread into international markets, continue to bring in, new profits and new members and expand into capital markets and business accounts and all these different revenue streams that like financial institutions can grow into essentially everything. As long as they continue to beat, my time horizon is when I retire, I guess, or when I need the money, and that's not anywhere near. So, yeah. I fear this is a spinning tires stock. I haven't heard that reference before, but I can, figure it out pretty quickly. Let's just go to the investor relations page really quickly. I've been investing for a long time. I'll show you guys what a spinning tire stock does not look like. Okay, bear with me. Oh, they didn't put it on their latest investor relations. Let me just go to my own spreadsheet. I was just going to bring up members. Over the last couple of years, going from essentially 1.8 million members to 11 million members. What are we talking about here? Average revenue per financial services client has doubled year over year. Like, in no way do I think that that is something that stays flat forever. You can have some debates about multiple right now, and that's what we're going to be talking about tonight. But, I think that that's just voting in the short term, in the long term, a weighing machine, right? Companies have been ignored for some time, and they can be forever. Like Amazon, for example, from like 2001 to 2009, I don't think it hit new highs during that whole time. And now it's like one of the largest companies in the world because in that entire period from 2001 to 2009, they continued to execute. So people are asking me during that time, hey, why don't you give up? It's opportunity cost. But whenever people say opportunity cost, all they mean is that into the past, right? That historically, that is what's happened. Okay. And there's been a lot of people who have quit at $6, that sold at $4, that sold at $7, whatever, and then didn't even get to catch the ride up to 18 or 13 as of today. So I'm up on SoFi. We're doing well. My average is $7.30. They continue to prove that they're getting better at giving out loans. They're giving out loans faster. Loan platform business is crazy. Credit cards are now getting into like reasonable, respected default rates. I actually don't know what isn't to like right now. It feels like it's been forever, but honestly, if you were to look back on like your investing journey, the first time I bought Tesla stock was 2015. Okay. It feels exactly like that. From 2015 to 2019, nothing. What was happening at the company? a whole lot. The battery technology was improving like crazy, new models of vehicles, new factories, everything was going well on that side, barring a few speed bumps, but those were the things that people had to focus on. I didn't hold all the way through 2015. I was a brand new investor. I was 18 years old. I didn't know what I was doing, but I bought it at 2018 and I held it all the way till 2025. So hold out, do a little bit of holding, try holding. It's fun. Actually, it's not fun. It's actually pretty hard, but yeah. I don't want to wait 4 more years, Tanner. Okay, well, what is a better investment? What was a better investment? Because now we're talking into the future. We're not talking historically. We know historically that Palantir was obviously, we all should have rotated our money and just went into Palantir historically. I know what you mean by flat stock price, but we can't guarantee that for the next 4 years. We can't guarantee that it'll be flat for the next 4 years. Anthony Noto is essentially calling for like 40 million members over the next 4 years. If you believe him, if you think he's going to execute on that, then I don't see how a company stays flat offering credit cards, SoFi Invest loans to 40 million users and stays at $13 at a $13 billion market cap. Assuming, by the way, that they do nothing with their time during that entire period. I highly doubt that. I was referring to your 2015 to 2019 Tesla comment. Yeah, so, well, one, it was still an unbelievable, even if you bought Tesla in 2015, it would have been one of the greatest investments of the decade. Even then, and I didn't even do that. But what's it called? The alternative would be to one, invest in the S&P 500 and then assume that you know perfectly whenever to rotate from 2015 into the S&P and then rotate out right before COVID whenever it started to explode. You pick a different company. Like, I don't know. Focus on fundamentals. The alternative is there's companies where you buy them and then the next day they double. You know, those happen too. And those people look like geniuses, but it's not genius. It's just timing. It's just, it's just almost luck. I can't tell you when the market is going to value SoFi appropriately. I think it's a little silly that they go down after unbelievable earnings. That's sentiment change. That's voting. That's not basing it on fundamentals or qualitative analysis here. I got the same questionnaire. It told you not to disclose the contents of the questionnaire. It was lengthy and had lots of options. Well, not everyone followed that. And I'm very happy that they showed off a very cool independence card along with new job offerings that look like they tie right into that. That's very exciting. Yeah. Also, guys, there was someone that emailed me that I don't know if they want to be shouted out at all, but they said SoFi is looking to acquire a crypto business. We know that because they said that they wanted to on their last 10Q. They said that it will keep the option open, but even the fact that they said that, knowing SoFi's history, they probably will. They have not shied away from M&A, mergers and acquisitions. And they said, hey, this company that I've just recently seen, pretty new business actually, might be a target for SoFi to acquire whenever looking at cryptocurrency. Figure Markets. Now, Figure Markets is a broker dealer for crypto. They've got many different crypto things that they've got on here. They have tools for institutional trading, for individual trading, all of these things, apps, website, whole 9 yards. They have crypto-backed loans, okay, which is another thing that SoFi has said that they've wanted. They have stable coins and places where people can even invest in people also doing the borrowing side. Okay. Now, there's a couple companies that you can find that do this. There's a couple of reasons why I also agree that it could be Figure Markets, and some why I actually think it couldn't. Okay. But it was still very interesting to me. One, the price range is right around where I think SoFi would like to spend. You could probably pick this up for under 200 million. Okay. It's brand new, but more about this is where is the About Us? I want to show you guys who the founder or co-founder is of where is it? I had it before about Figure Markets. Let me show you guys who the founder is. Do you recognize the leadership team? Anyone here recognize this leadership team? Mike Cagney, anyone? The co-founder of Figure Markets is the original co-founder of SoFi. How funny is that? So there could be some potential cross-sell here, boosting up a lot of their products with Galileo and stuff like this, and then also potentially boosting up a lot of the products that SoFi is offering on the crypto side. It's a pretty small, tight team. From what I read, they said, maybe there's 90 people working here. So not too expensive. Crypto products that they want. Really close, tight relationship with SoFi. However, Mike Cagney, to be fair, this might be why they won't be here, is that the reason why he didn't work for SoFi afterwards was a frat-like culture and a lot of controversies that came with that. So back in 2017, whenever he did leave, Mike Cagney left because of potential wrong reasons. I should say allegations. Anywho, who knows if that's something that they are going to look at? I know that it'll be a smaller name. They're not going out to acquire a Kraken or something like this. They want a smaller name to give them the infrastructure, everything like this. So who knows? Could be interesting. They're in California. They're located very close to where SoFi is located. Could be something that ends up happening. So thank you to that anonymous tip. That was a lot of fun. All right. So we talked about just recapping some things, and then we'll do some more questions. And I also have some non-related SoFi stuff to also talk about. But let's go back, because there's a lot more people in here right now than what we saw previously. Okay. There was a person who maybe they're not supposed to give out the questionnaires. I mean, sorry to anyone who got any other questions and wants to remain anonymous. I will keep you guys anonymous, but I do want to see the questions that they asked you. So if that could be set up, please send me some screenshots. I'd love to know. I'm not going to get you in trouble. They won't know it's you. I already shouted this person out because he tweeted it out on his live account. So, I mean, he did himself a disservice. If he even wants to call him that, I'm sure he's not going to get in trouble. But anyway, reviewing the following credit card offerings, SoFi's Independence Card is going to offer cash back that is between 5% for dining, 3% for gas, groceries, and drugstore, and 1% on everything else. But the trick is that all that money will be automatically deposited into a SoFi Invest account. Okay, you're going to be given funds like S&P 500 index funds or money market funds, or even a curated crypto portfolio that will probably get locked away. Now, they said you also get access to the SoFi Investors Club. I've also never heard of that. The SoFi Investors Club seems to be a VIP access to investing strategies, insights, and early IPO access. VIP access to investing strategies and insights and early IPO access. That's pretty interesting. You know, like CoreWeave, for example. CoreWeave would have been a great one to get IPO access to. The stock's $120 or $115 or whatever it is now. But holy, as a credit card user, a avid credit card user, I would love this card with my whole heart. 5% cash back. I get to put it into the S&P 500 index fund. Fine. Perfectly fine. Investing strategy sounds like tutorials for options. I mean, it might be tutorials for options. I think it would probably be somewhere around macro news updates, stuff like that. Yeah. Probably their own set of live streams and stuff like this. How long is it locked? It doesn't even say locked. There's nowhere where it actually says locked. So it says your Independence card gives cash back that is automatically deposited into a SoFi Invest account. It turns your spending into stocks, ETFs, money market funds, or crypto ownership. You get to choose where your rewards grow within 3 options. Maybe you can pull it out. Maybe there's no lock at all, which is even crazier. They're offering 5% and they're fine with that. Maybe they want you to take it out and spend it all again. Yeah, I think you might just be able to sell your shares the next day. Who knows? I mean, they get paid for buys and sells. Maybe that's what they want. One user replied to this thing and says, "Give me 5% on groceries, 3% on dining." Oh, he's reversing it. But he also requested a 6% margin interest, and I'm moving everything into SoFi. I personally spend so much more on dining and Uber Eats, way more than I do on groceries. And maybe that's bad. As I say it, it sounds bad, but this car is designed for me. Yeah, so we'll see. And yeah, we've already covered the Jared Isaacman news. Thank you, Throwable. I appreciate that, but I already saw it. Would you guys switch over to that card? But it's 1% on everything else? Yeah, it's 1% on everything else. Don't use the card for everything else. Use something else. Have multiple credit cards. I would prefer a flat 3%. Have 2 credit cards. Why is that hard? You don't even need to worry about it. Set up auto pay, select the bank account that you use. There's 0 risk. I've got like 5 credit cards that I probably have a balance on right now. Just tap, like, it takes no effort at all. I've got like a Google Wallet. I'm just like, oh, you know, this is better for dining. Just one swipe and then tap. I put 0 consideration into it. Well, not 0, some, but you need to put just a tiny bit to utilize both a 5% and a 3% card. What card are we talking about? SoFi is polling their users for a potential new card, which they've already named, by the way, which makes me think that they're very far along on this offering, the Independence card, which has offerings that give it up to 5% cash back for dining, and that includes takeout and delivery, but the cash goes into an investing account. I think it's pretty freaking cool. Most people have 2 cards plus. Yeah, I mean, just in my wallet, which I have like one of those tinier wallets, so I don't carry a lot of cards. I have 1, 2, 3, 4, 5, which I almost just showed the camera because I'm an idiot. But yeah, I've got a joint card with my, girlfriend and everything, so we spend household stuff. I've got a high cashback one for just random purchases. I've got Amex for travel, and then I've got a business one, and then a multi-currency Wise card. Easy. Can the Independence card be better than Robinhood's Gold card? That's up to you to decide. That's up to you. If you spend a lot out in dining, then yeah, your cash back could be more than 5%. And if you want that money to then compound for you, like a lot of people like the roundup features and these sort of things that help users invest the rest, right? This is essentially saying, hey, the cash back is not going to help you pay your rent at the end of the month. So use this to just build up an S&P fund. Now, if I were to ask Noto to be very particular, add the option to have a NASDAQ 100 composite fund instead. If we're really maximizing our gains, let's just put it into a better fund. What about 20 credit cards, which I do have? Nice. I probably have that many outstanding in my name. I mean, all these ones behind me are in my name. Which everyone's like, you can't do that. It affects your credit score. I think I just checked my credit score the other day. I'm like 824. I'll be fine. Like it does not. I don't know. Card utilization and the things that paying back on time. That's the stuff that affects your credit score, not hard credit checks. I mean, it does temporarily, but it goes away instantaneously. And never close your cards. That too. They should tie into SFY. I mean, it probably does. It probably does. The S&P 500 index fund doesn't necessarily mean SPY. It could mean what Freddie's saying here is SFY, which is SoFi's index fund. As long as it doesn't break any sort of conflict of interest type products things, because financial services is weird like that, or like the industry is weird. If it doesn't do something like that, that's probably what will happen. Yeah, I've got an Amex. I don't have Rogers thing though. I don't even use Rogers at all. So yeah, does Vanguard have a credit card? Would love to tie it to VOO. That's funny. Okay. Yeah, I was worried about their last credit card that offered 3, 2, and 1 as the tiers that went down. I just didn't think it was compelling enough versus a just 3% everywhere. But a 5-3-1 competes very well against a 3%. That gets a lot of people thinking. I bet you Amit pulls out a SoFi credit card at that point and taps a 5% cash back, leaving his Robinhood Gold card and his credit card to get that 5% cash back. And if we can get Amit to do that, that is real product differentiation. All right? Which SoFi products still do have to separate themselves from their competitors, like on a standalone basis. But this could be that. And even on a standalone basis, you're going to have to download SoFi Invest. So you're signing up for a card, you're signing up for SoFi's Invest. So now you're getting a wider range of their products. You're probably signing up for other things. SoFi Plus is going to offer you better benefits across the board. Pretty exciting. SoFi Plus is going to be a major unlock for a lot of their growth. The same way that you know, Robinhood Gold is for their products. Payush says SoFi is now making profits. It's a profitable company. Let's enter the S&P 500 now. Can't do. That's a no-go. I think the requirements now for the S&P 500 is a $20 billion, $20.5 billion market cap. SoFi isn't there yet. But if we continue to hold the growth, so we're June 1st is tomorrow. Okay, that's when we wrap the month of May. About 10 days after that is whenever the big reporting companies on the app downloads, on the monthly website traffic start to release their reports. Then we'll actually get to see how much traffic SoFi did. Based on all of their advertising that they did with the country music festival thing that's coming out, the sports stuff, the what is it, TGL's new excitement for season 2 and the new teams that are starting up, I think that we could potentially continue to hit new highs. And if that happens, I'm stoked. You really cannot dislike SoFi if they're gaining new members, like at faster rates than what we've seen previously. If they continue to break new member records, what are we talking about? Do you think Robinhood enters the S&P 500? Yes. What is SoFi's market cap as it sits? I think it's 13 billion right now, or 14 billion. Let me check. 14.7 billion as of the end of Friday. And remember, that's all the shares. That's $13.30 times the amount of outstanding shares. So it's the total size of the business. So whenever people say like, oh, we have a $100 company here, and then other people say, oh, this is a $15 company, it's cheaper. Well, that's not necessarily true, okay? It's like the biggest new investor mistake. What you need to focus on is market cap and multiples of earnings, okay? So if you're seeing, price to earnings, which is the cost of the company and how much their market cap stacks up to their actual net income. You can go down even further to price to free cash flow. You can get particular about it because some companies have insane amounts of debt and no cash. So you might want to do, their EBITDA over their enterprise value. It all depends on the ways in which you're looking and investing in businesses. So just keep in mind that it's not just about stock price or whatever like this. Dilution takes in all this effect. I don't know. I'm sure there's a bunch of beginner videos, but also I don't want people to get lost whenever they click on these videos because maybe I'm talking past a lot of those things. Even if you guys have beginner questions, I don't mind answering any of them. We just did a poll on the last live stream. We said how many people are new to investing over the last 18 months. So starting essentially in 2024 or 25. It was a good amount. It was actually a really good amount. Kendall, it's not 18 billion anymore. It's 20 billion. So you can hold 18 billion as much as you want. It's not going to do you any favors. 20.5 billion is the new S&P 500 requirement. And it's going to continue to climb over time. Sanjay says, are you writing any covered calls on SoFi? If you are, what strike prices and expiration dates? I'm not. The premiums are just so unbelievably low that you'd have to sell them like really close to the actual strike price or to the actual like stock price. So no, I'm not. As the stock starts moving, like if we just jump from 13 to 18, people will get excited about the company. They'll think it'll immediately go to 30. So then the premiums will spike. But as it stays flat right now, no one's really willing to bet on call options on SoFi, so the premiums are lower. It's a buyer's market. Uh, I hope Blue Owl Capital continues their business with SoFi's loan platform. We'll have to see. So far, Fortress has showed that, the loan platform is a great place to invest in and then invest again. So, what's a good starter option? Patrick, help me explain, or help me with your question. Like, you're wanting to write options. What's a starter option? Um, I only use my SoFi account to receive my direct deposits and transfer it into Robinhood to buy stocks. Robinhood won't let you receive direct deposits? The cash accounts don't let you receive direct deposits? It's not that I'm like being facetious or something. I really don't know. What is safest? Options or stocks? Stocks. What's the safest out of stocks or options, or what's the safest option to write or buy? I don't know. None. Are you still optimistic for PayPal? I mean, overall, I'm optimistic on the company, but I'm not currently a shareholder. I think that they could potentially do a lot in this AI era. They seem to be really focused on agentic AI, or like, sort of like an agentic commerce. That'd be really, really freaking interesting. But I want some fundamental change before I bet on that future. I wouldn't even put buying options and selling options even into the same category, Avid. Like, one is actually risky and the other one carries zero risk. The one carries risk on opportunity cost or locking yourself into a stock that you don't want to hold. Crossroads says, so this is SoFi Weekly? No, this is the Big Tech Frenzy that I didn't do on Friday. Do you DCA SoFi? Not currently. Right now I'm like buying Nvidia and Google, but Also, Roy is late, Donald Trump. Payush actually asks a pretty technical question here, but I'm sure you already know the answer. What does SoFi do with the net difference from Fed funds rates of 4.25% and then giving me 3.8%? They're essentially offering so it's not really how it works. They're taking your discounts rather than going to the market for 4.25%. So then they can get a better amount of money whenever they're handing out loans. Okay, but the spread is what they're keeping. That's their profit. They're trying to increase their margins by offering consumer deposits. And then if you talk about like JP Morgan giving you 0.01%, they keep that entire margin and then give out loans that have higher APRs than SoFi. This is kind of interesting. Do you see SoFi being bought or becoming a legacy? I see them becoming a legacy bank more than I see them being bought. Okay, because every day that passes, they get more expensive. So I don't foresee that any of the large banks will want them. Maybe if they start growing at crazy rates in customers from 10 million to 50 million, like SoFi or like Anthony Noto wants, then like, maybe that raises massive red flags. But honestly, I've been on this sort of headspace that all the like CEOs of those large banks are too old to care about the long-term future of those banks. And instead, what they want to do is, balance the sheets well enough, buy back stock and increase dividends so then they can enjoy the shares that they've acquired during their employment for their retirement. I do not think that they're looking out like founder mindsets on the legacy of those banks. That's why they're not growth focused. They could be growth focused. It's not like there's not smart people at Wells Fargo, but they insist on spending $30 billion for buybacks rather than acquiring, an insanely good fintech that could increase their future growth. $11 million members and close to $30 billion in deposits. Yes. I know JP Morgan is moving to cloud as we speak. What will be SoFi's moat when banks move their techs as well? Well, I mean, they're overall moving faster. It's not just that the back end is better. I mean, they're just less greedy. And it's hard for JP Morgan to be greedy whenever, they have dividends that they have to pay. They have branches that are expensive. They are like a lot of the legacy infrastructure, even though they're moving to cloud, will still exist. They have bloat, that happens to all businesses. SoFi over time and probably even right now has acquired bloat to some degree. JP Morgan is actually building more branches. Yes. SoFi's takeover would be them adding candlesticks. I don't think that. I mean, maybe one day that might be a strategy that they end up doing, but I do not think that they care about going after active traders. They're not going to try to compete with Robinhood head to head. I think no one really wants to do that. Um, 1 million members a quarter in Q3. I doubt it. I think SoFi gets to 1 million members in 2026. Tanner, I'm behind the stream, but why did you say to never close your credit cards, even ones that you haven't used in years? It hurts your credit score. I mean, obviously, if you're paying like annual fees on some of those cards, then yeah, but if you have a, no annual fee card, just, I don't know, chill with it. Cut it in half if you need to, but I wouldn't cancel the line. Let's see here. Moved from Chase to SoFi solely because they had no savings, also higher point rewards. Fox, 100%. That's why most people come over. And then they stay because the UI is much better than what you're going to see at these legacy banks, right? And you'll notice that a lot of their products are much easier or much better. Obviously, JP Morgan has some unbelievable credit cards as well, but those are really the areas that they want to compete very strongly in because that's where they bring in all the profits. Okay. The debit card segments, the checking accounts, all these things, they don't really bring in a lot of money for JP Morgan. So SoFi has found a way in a lower margin environment to find a way to get 10 or 11 million users, right? If JP Morgan was all that great, at offering their consumers what they want, SoFi would never even have been able to get started in this market. It's so much easier for JP Morgan to get the capital to defend the environment that they've been in for 200 years. It's hard for a company to come in and start fresh and say, hey, you know what, leave what not only you've been using, but what your parents have been using in generations and generations. But people hate saying, hey, I want to sign up for a new account. They say, no problem, come in next Wednesday. What? No, I should be able to set up an account right from my couch on a mobile device. And then on top of that, give me the best rates in the market. So that's allowed SoFi to gain a pretty good market share. SoFi, almost in every single product category that they have, is gaining market share. That doesn't mean that they're gaining users. Okay. Like, if the entire financial services in the United States has, new citizens through immigration or birth rates or whatever is happening, people are turning 18, they're allowed to open new accounts, they're getting credit cards for the first time, there is a natural increase overall in, like, you see it in just like the general money supply, right? Like there's overall inflation in a bunch of different sectors. Gaining in market share means that in the total pie, no matter how big that pie is expanding, the widening of their slice is getting bigger. So in order to widen their slice, everyone else has to lose. The rest of the market has to lose. So SoFi is gaining market share in every single product category that they're in. Okay? That means the entire existing personal loan market, that one's probably the one that's been most devastated. Student loan markets, most devastated. They've put companies out of business because of how successful SoFi has been. Okay? All of these ones have made it worse for other businesses because of how good SoFi has been in their markets. Gaining in market share, there's two things that honestly, to some degree, you can focus on these two things and nothing else, and honestly be a good investor to some degree. And then I'll tell you where that can also go wrong. But is total addressable market expansion. So what is something that people were not doing as much before that they're doing, that they'll do a lot more into the future? And then how much within that growing market are they growing? So AI chatbots exploding right now. The pie would just look like this, the universe expanding ever expanding. Massive. And then ChatGPT is going, oh, you know what? We're actually taking Gemini, we're taking and we're just beating them. We're getting bigger and bigger and bigger. That's what you want. That's the ultimate business. Okay. NVIDIA, same thing. GPU usage, data center usage, bang, 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 bang. Market share, bang, 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 bang. It's just widening, right? Ultimate business. Then you start looking into, okay, well, are they seeing pricing power, or are they spending a lot to get this growth? Are they just focused on top line sales, not getting bottom, money to the bottom line? So the next part of that equation, as just a very flat line, this is so easy to be a growth investor, would be like a company that I really messed up on was Skills. So Skills was a company in a market that was ever expanding, online gambling. Okay. They were taking market share crazy. Their user growth was much faster than the overall market. The part of the equation that I missed was, okay, yeah, they have a lot of sales and marketing, but let's assume if they turned off the big pipe, like you're closing the water. What happens if you close the sales and marketing spend? Do users continue to grow but at slower rates, or do they all at once all fall off because the only reason that they're using this platform is because they're being incentivized to? And that was what was happening in the form of Skills, but it doesn't mean that that's what's happening. That was my big concern for HIMS. Is it only because they're just a big marketing agency, or is it because it's the product that's actually making people tell their friends, or some sort of natural accumulation of users? So for HIMS, they've actually broken out, but I should have been able to realize that earlier, but because of my past mistakes with Skills, I was extra scared. Now, you look at a company like Nubank, for example. Population's expanding. The GDP per capita is expanding. Internet connectivity is expanding. The availability, the total addressable market, the amount of people they could go after is expanding. And they're doing that. And they're doing that without a sales and marketing budget. Essentially, almost like every single customer that goes on to Nubank is referred organically. They're getting more out of each user. They're improving their pricing. They're able to take higher margins. It is a perfect business. Like legitimately, guys, whenever I say this, Nubank is a perfect business model. The reason why they don't have one of the highest multiples on earth is because they're still in banking. So right now they're giving out loans, but there's always that question in the back of people's heads with banks to say, well, what if you start giving out the wrong loans? What if you've put in your line items for sales that you've made a bunch of money by selling loans because you're assuming that those people pay you back, but really they're never going to. That's what SoFi does. That's what has a lot of analysts worried with SoFi is a lot of their the loans that they end up writing on their balance sheet, they've already assumed the money that they are going to acquire from those users. Now, what SoFi does, which is so interesting, which makes me even more bullish rather than not bullish, is that they say, hey guys, we're going to assume this revenue, but we're also going to assume that we're losing about 8% life of loan. Okay. So 8% of all the billions that we give out are never going to return to us. And we're fine with that because we're actually giving them out at 13% or 14%. But then at the end of the life of the loan, what SoFi is actually realizing is that they probably shouldn't have said 8 at all. And they probably should have said somewhere closer to 5 or 4%. So even the part that they've written off is actually doing better than they expected. So not only were they appropriate in saying, hey, we would have earned that money, but they've actually been too conservative. Okay. That is another business that you want. SoFi's not assuming enough. And Wall Street got that backwards. They thought that it was a problem, but it was actually to a great benefit. They actually were being very conservative. Okay. You were describing Robinhood? Well, I mean, Robinhood is also a very great business. I love Robinhood. Like you're going in, people are referring organically. You're getting more out of each user. With the money that you're getting from those users, you're able to make better products that enable you to just that's the snowball effect. All the momentum that you're gaining is just helping you gain more momentum. You're just getting bigger and bigger. So yeah, I'm very, very positive. I meant on the marketing side, not quite. Not quite. Nubank has completely referral-based marketing. We're not seeing that at Robinhood. To compare Nubank's success to Robinhood's success would be a massive discount to Nubank. I'm sorry, but that's true. I love Robinhood, but they pay a lot to incentivize users to come back. Okay. Matching on bringing accounts over, offering a ton in cashback through credit cards, stuff like this. All those things are very expensive sales and marketing strategies. Nubank has none of those. They essentially don't offer cashback via credit card. They don't have high APYs for, well, actually, that's not true. They do. But yeah. And now ACAT positive across the board. Yeah, Robinhood is. Meaning they're seeing more transfers in than transfers out across any of their peers. This is why I love this channel. I can do more of the breaking down why I like buying companies. I mean, I've got no problem. Like that's what I think loving investing is. It's like just the overall strategy of it, Being a growth investor is the coolest place I think that you can be. Buying great businesses, owning them, having a little bit of pride in the companies that you own too. I think that that's fun. Marcus Aurelius, appreciate you joining. Appreciate you joining, you stoic man. At the beginning, we talked about you're going to have to go back because I've explained it like 3 times. But there's a brand new credit card that they're potentially looking to release that has 5% cash back. Pretty freaking cool, actually. And it requires multiple products. I also, guys, for the people who are new to this stream that didn't see at the very start, I also went and looked at their career offerings. They now have multiple job offerings that are not for one specific job, but essentially across the entire SoFi board. So I see Crossroads in the chat. He's going to love this if he didn't see before. A lot of the job offerings are for engineers to come in and work across SoFi Money, SoFi Credit Card, SoFi Invest, and crypto. What that also says to me is that those are probably all running on the same stack. If you have people coming in, engineers to work across the entire SoFi Money, SoFi Invest credit card, they're all on Technisys. Okay, we didn't even talk about that. That's exciting. That means better margins for SoFi. That means potentially faster product updates. That means potentially products that work better together, which is what they've always assumed. That's what's up. I like that a lot. I think 2025, like I have not changed my ideas about this. I think 2025 is going to be a great year for SoFi. I think there's been, let me adjust the audio. Okay. Also, some people see me looking up and they're like, what are you looking at? I've got a monitor here, here, and here. So sometimes whenever I'm looking at stock prices, you'll see me up here. Whenever I'm doing my audio, I'm up here. Notes are here. You're here. Sorry, what was I talking about? Oh, yeah. A lot of the times whenever I was talking about SoFi previously, I was talking about, in the future, it's going to get good. I really think like SoFi's good future is like right now. Like loan platform business is killing it. 27-inch screens. P-dubs. SoFi's killing it right now. They're cross-selling SoFi Plus. They will wrap SoFi's year as being the year of SoFi Plus. That's what they're going to call it. I can guarantee it. I didn't buy a Lenovo. Honestly, I wasn't too excited about their website either. They kept saying, like, I was going on their thing, so I was shopping for a computer because we were having some lag and everything, and you guys suggested that I check out Lenovo. And they were saying, like, $50 off or 50% off these PCs. Previously $5,000, now $2,500. And I'm like, this is a $2,500 PC all day long. If you were charging anyone for this at $5,000, shame on you. Like, I think they were just fake discounts. So I don't know. I went through, they look like the same old, like, I don't know. Maybe I'm wrong. Also, am I the only person that thinks the ThinkPad is by far the ugliest laptop you could ever buy? It is the ugliest thing. With the little red ball in the middle. All right. Buy Tesla on dip before Robotaxi? What dip? What dip would you like to buy it at? I mean, I would buy it if it dipped. If you're calling 346 a dip, I don't think it is. You could have got a $214 dip a month ago, well, almost 2 months ago. Lenovo desktop. I'm looking for a Lenovo desktop, but I don't know. I'm not necessarily looking for a Lenovo one. I'm looking for a desktop. It's actually kind of hard buying a desktop for the work that I want to do. It seems that the thing that's actually best for me uh, is like a Mac Studio, so like something like that. But I don't want Apple products. Just build it. I mean, I might, or I might buy the parts individually and then have someone build it. Thoughts on Jensen's visit to Europe? I'm excited about it. Let's see what kind of deals that they end up signing. I don't want to actually fiddle with the prongs and stuff. I know that they break easily. I'm not like, obviously I can throw in some like, you know, RAM sticks or something. Like I'm not that incompetent, but I don't want to set up like a power supply and a motherboard. Like I don't have time for that. I've never really built a PC. All of my computers that I've purchased have been custom builds, but usually I just go to a computer store. Now I just go online and just I want this, and then I don't know, buy it. Okay, let's see here. Short Apple. I'm not shorting. I don't. I honestly don't think I'll ever short anything in my life, but I wouldn't bet on them. Great show. I'll follow you on YouTube and X. Bailey, I think that's a great way to wrap up the show. Ladies and gentlemen, it's 8:30. Okay. Let me take you to the next show here at 10 o'clock. If you guys like the comments that I'm making about SoFi or whatever, not everyone agrees. Okay. There's a whole world out there of people who think that SoFi is just a bank. To some degree, it is a bank, but I also think that it's a great bank and one that's growing faster than any other bank. So I should probably have a multiple. But anyway, we're going to be having a full debate. Myself, data-driven investing, Amit Kukreja, and Stephen Fiorillo. It's going to be on my channel, on their channels. Come check it out. It's going to be a lot of fun. Okay? It's going to be a nice friendly debate. No one's getting hurt here. But yeah. Should be fun. 10 p.m. Eastern Standard Time. It's where all the cool kids hang out. Thank you all so much for watching. I really do appreciate your time. But bye for now.